Morning all. How are you doing? Morning Ladder, morning Alex, morning Diamond. Right, another morning. We had figures coming out overnight on the Aussie. We had the CPI, which came out negative. That's quite a miss, that. 7.6 was the forecast, and we got 6.9. So that's a big negative for the Aussie. So I saw this morning. I looked at this morning before I opened my charts, and I was like, "Oh my god!" And I was expecting everything to have tanked dramatically, but we haven't got any massive dramatic tanking on the Aussie, which is good, obviously. Oh, for Christ's sake, use the right bloody button. So Aussie New Zealand I'm in at the moment long. And we've been stuck in this sideways movement now for 5 days. I was expecting this to be like an ADR hit to the downside today, but it's not. You can see on the Aussie New Zealand, Aussie CAD, we've got a bit of uptick. Aussie Swiss ticked up. Aussie Yen ticked up. Aussie US ticked up. This is negative Aussie news. So yeah, very odd. CPI year on year, obviously, is the CPI, the monthly and the yearly figures are obviously important, but I think there's a lot more emphasis on the monthlies. Your yearly CPI figures are made up of obviously the monthly figures. So the market, I think, at the moment is reacting more to short-term news than to long-term. So I think that's why we haven't had the negative reaction you would expect to get off of a number that big. So that's my theory anyway. We knew the the Aussies weren't doing quite as well with the inflation. I say quite as well. It's a weird thing to say, isn't it? Because inflation is bad for everybody, but it's good for a currency. So it's like you want inflation to come down as a human being, but as a Forex trader, you want inflation to go up and drive a currency up when you're long it. So it's a bit of a weird double-edged sword when you talk about it. But yeah, I think that's the reason we haven't got the big movement off of that, because it's a yearly instead of a monthly. So we'll see what happens this morning. We got the yearly estimates for CPIs on the euro as well this morning. So yeah, no real movement overnight on that. If you look at the news feeds, we've had some data coming out, GDP from the French, etc., but it's all pretty neutral. The rest of the overnight, manufacturing down in China, which isn't good for the Asian sector. Apart from that, there wasn't a massive amount of other news. We're minus 6% on building. That's not good. So building permits, or building approvals as they call them in Australia, is one of the leading indicators used for forecasting job security. So there's an awful lot of labour in all countries. Obviously, when you're building houses or building anything at all, you involve every single trade out there. And when you have building approvals or building permits dropping, it means that there will be less labour requirement in the future, because obviously if you're getting less people wanting to build stuff, they're going to employ less people. Therefore, you tend to find a negative impact on job security. So that's not particularly good news for the Aussies, but that's kind of something that trickles in over 3 to 6 months usually. Japan, another miss on the yen. But yeah, that was it pretty much overnight. The only other thing we had last night, which I looked at just before I went to bed after the football, was basically this of the Fed. So they're looking for a 75 basis point discount rate ahead of November's FOMC decision. So basically, they're confirming that they're going to put the rates up, which should be bullish for the US dollar. And we've got OPEC plans to cut production on oil, which should be bullish oil. So all news, basically, apart from that Aussie one, which hasn't really affected anything, is all good for the positions I've got on at the moment, which is, at the minute, I've just got oil long. Oil long, DAX short, Aussie, New Zealand, and New Zealand CAD. So that's news. Obviously, today we got big news. Market's just about to open in 3 minutes. We got big news today. We got non-farm employment at 1:15, 15 minutes before. An hour and 15 minutes before market open. We've got the GDP for the US an hour before the market open, and then half an hour after the market open, we've got JOLTS and pending home sales. And then this evening, we've got Powell talking. So lots of volatility, all revolving around the US dollar. So we could have some very big movement of the US dollar, and therefore very big movement off of the indices today. And then we've got Swissy CPI tomorrow morning, which is going to be out before I come on as well. So yeah, big day today across the board. Oil, off of the back of that news overnight, didn't have any movement. It came quite late in the day. So today I would expect oil to go out the gates pretty quick, and I would expect a bullish move today. So we will see what happens with that one. So that's all the news covered. Morning Capano, morning Stevie. What's your view on Euro New Zealand? You're going to have to be a bit more specific. What are you trading? Are you trading 1 minute charts? Are you trading 10-year charts? I've no idea. My view of Euro New Zealand's got nothing to do with you, because I don't know what you're trading, how you're trading, what direction you're going, what time frame you're using. So I can't really answer that question. If you're looking for an intraday setup, I assume you're trading maybe hourly. Don't know. Let me know. I can answer that a little bit more if you give me a bit more detail. Just quickly looking at indices before the open. So yesterday, we didn't really go anywhere. So we obviously had the down day on the DAX. We didn't quite put an inside bar in yesterday. We were sort of inside bar. So we had obviously the high there, the low there. We just trickled down and tapped out the lows, and then we pushed back up again. Horrible, 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 horrible day yesterday in the New York session. It was horribly rotational, and yeah, just up and down like a kangaroo. So yeah, not a good day yesterday. It was very, very sideways. We have started the rollover. We need to see if we can get these lows broken and get this reversal alert on the daily chart. Once we get that in, I think we've got a chance of starting that move. But we haven't had the big day yet. We haven't had this big day that typically comes at the start of a new leg. We're really, really struggling here. It feels to me at the moment as if we want to do a Santa rally, but it feels also as if we are too extended in a recession to be able to gather enough momentum to push up there. So it's tricky, really tricky at the moment. The Nasdaq is obviously down. So that one's going the right way. Yesterday, we had another down day. So the Nasdaq put another leg down in. Again, we didn't quite get a break below the recent lows. So these lows here, after the initial push off of the US dollar negative news, we haven't managed to break down below there. We tried yesterday, couldn't get through. We're there again today. So if we can get that cracked again, we might get that flush today. And as soon as we get that flush on the US indices, that should bring the DAX down along with it. But S&P looking pretty similar, and the Dow looking very similar to the DAX at the moment, reacting off of that double top. So it all looks as if we're poised bearish, but we're not managing to get any movement. The Santa rally, which is obviously the December run on stocks, starts any time really towards the end of November and goes through December when it happens, if it happens. There's a 73% chance of getting a Santa rally. Yeah, so there's 3 out of 4, whatever you want to call it. But there is a higher chance of a Santa rally than there isn't. But we have always had the vast majority of our Santa rallies happening in a bull market. We haven't had many bear markets over Christmas. So this is a really difficult one to forecast December. But quite often you do get that rally. Market's off the charts this morning. Ooh, hello. DAX is flying. Oh, they're all flying. Okay, that's off, isn't it? So yeah, so really difficult to call at the moment on the indices, but we are, they're all looking as if they want to drop, but they're struggling. It's struggling. It's really like a spluttering car at the minute, isn't it? So we will see. We will see what happens. No orders from the EA. The EA doesn't trade yet. We've got to wait for the opening range to be in yet. EA trades after the opening range is in 5 minutes. Oh, I got to the bottom of that data issue yesterday as well. Remember, the EA didn't fire yesterday morning. Basically, it was obviously the data was out. They fixed the problem. It was a data feed issue from their liquidity provider with my Forex funds. So they fixed it by the afternoon session, which was too late, obviously. But yeah, so that I want to see obviously if the EA fires tomorrow. If the EA doesn't fire this morning, I've got another problem, which I'll have to have a look at. In fact, let me just quickly want to double check. Come on, what are we doing? Okay. Leave that open for a minute. Wow, that's a hell of an opening range. This isn't going to be an easy one this morning. Big rejection at the highs there. Got 30 seconds till candle close. I will have a look, Capano, at your Euro New Zealand in a sec. 1 sec. Candles look back to normal today, yeah. So yeah, I basically went onto their Discord channel. I've got so many funded accounts I've had, and with so many different prop firms, I can never remember who does what. Some of them are really good on Discord. Some of them have got good Telegram channels. Others don't do any of that, and they only do Facebook. Some of them only do email support. So I went onto their Discord channel for my Forex funds, which is where the majority are. Yeah, orders have gone in. Perfect. Good. That's working nicely. So yeah, went onto there, and it was a known issue. Basically, there's a few people talking about the candles out, but it does show a weakness in the EA. Obviously, if you get a data issue, but I have to say that's the first time I've ever had the data issue in forever. I mean, I've never had it. Never had that. Never had a 5-minute candle close on a 2-minute and a 7-minute and a 13-minute time. It just doesn't happen. So shouldn't be an issue. Just happened to be the second live day of testing that it happened. But anyway, so we just see what the DAX does at the gates. Aussie New Zealand. Oh yeah, sorry. So yeah, indices. I'm still bearish on them. Obviously, I'll go with whatever price action tells me, but overall looking bearish. Just taking a buy long there. This is another thing that I'm considering with the EA is putting a price offset on the initial 5-minute. Because we do, not that often, but we do get double tops going in like that on the opening cash balance, because they reach for a level and then that's the level they want to sell at. So you get a load of sell orders driving price back down. When the buyers retest that level, it tends to come off it quite quick. Obviously, with the spread, you kind of need to offset that initial order. I'm glad that's happened this morning, actually, because it was something in the back of my mind to test, which I haven't done yet. So I'm going to test that, see if it makes a big impact. Because obviously, if this does tank now, we're obviously going to go short. But that was an unnecessary loss. So yeah, indices bearish still, but we're not managing to get that movement, especially on the DAX. The DAX is holding up a lot better, as is the Dow, than the other indices at the minute. They are starting to roll over, and obviously Nasdaq's having a massive sell-off. Tech industry's not doing well at the moment. I'll have a quick look at that Euro New Zealand for you. Hourly, looking to buy Euro New Zealand. Yeah, double bottom. I mean, it's I can only give you. I don't know how you trade. There's a double bottom bounce there at previous support. So yeah, looks like a good long. Stop under there if that's your strategy. Euro, obviously this is in a massive bear run at the moment, so you're buying against the trend. So you counter trend trading. So if this is a mean reversion trade, that's fine. Again, it's very difficult to give you any guidance. I have no idea what your strategy is, so I can't really tell. You should be telling me. If you're going long on it, why are you going long? But Euro, I see powering up, and New Zealand has had a massive run, and I think we are due a big profit take on New Zealand at the moment. So New Zealand is still off the charts. I'm short New Zealand dollar CAD. Excuse me, on my other account. So yeah, I think we're due a profit take on this. I think we're due some weakness to start creeping in on the New Zealand dollar and the euro. I get a feeling we are going to start to see some strength coming in. Lagarde's been pretty hawkish. It all looks good for the eurozone medium term. So yeah, euro New Zealand. I don't see a problem taking long on it. But at the moment, you can kind of trade in either direction, can't you? But again, I don't know how you're trading. So I would have been trading that personally, and I'd have been trading that. But so right now, I wouldn't be trading anything. 15-minute, I would take an entry. There you go. Lovely 3-bar reversal. Yeah. So I keep talking about 3-bar reversal patterns. There's one there. Down, pause, push. Down, pause, push. Reversal, retest. So big rejection up at the highs on the DAX. Looks short to me. So if this does go short, I would like this to break and then pull back, because that means I'll get 2 positions short on, which will make it more profitable. Right, ADRs, nothing today. Weeklies, we've got Aussie CAD hit. So Aussie CAD's obviously had a big day yesterday. Canadian dollar yesterday got absolutely trounced. Off the back of again, these figures that are coming out at the moment are so the price action movement off of these is so bizarre. We got a neutral result from a GDP on a month by month, probably the weakest figure you could get, isn't it? You know, the GDP change from month to month is so insignificant in the grand scheme of things at the moment, and it came out as they expected it to, and the Canadian dollar just went mental. So, you know, you talk about, you know, them manipulating the market based on news because they can. There's a prime example of it there, isn't there? So, yeah, obviously Aussie CAD, big push up. We've got an ADR on that one. I think that was a 225 ADR, wasn't it? Something like that. 1725 off an 83. Yeah, so it's about, yeah, it's a big ADR that. So 160 is 200 ADR. We did 172 on that. So yeah, big move up there. US dollar CAD, same thing, massive movement to the upside. Euro CAD, big push. Everything CAD basically, boom, collapse. So obviously that one has already hit its weekly range, but that is based on just 1 day's movement. So this is kind of just an ADR here at the moment, isn't it? So so yeah, so pretty big move there. It's Wednesday. Anything that hits its weekly range on a Wednesday has got a very good chance of either mean reverting or going into a range. So I would say if we get up to yesterday's high and take liquidity there, there's probably a good short opportunity there today. So dropping down to M5 and just waiting for them to take it up to that level if they do. And then if they push above and pull back down, you get a reversal alert up there. That'd be a good looking short opportunity. Or just, double topping it. So yeah, we've done our weekly range already in a day. There'll be a few others. If we get any pushes, any negative movement on the Canadian dollar again today, you'll find quite a few of these other CADs are going to hit. We're not far off on some of these other CAD pairs. But yeah, Aussie CAD was the only thing that's hit there. Obviously ADR's nothing so far today. Pretty slow Asian session at the moment. On the RSIs, we've got a couple. We've got CAD yen. Now, obviously the yen, I am bearish everything against the yen at the moment because I'm anticipating some strength on the yen now moving forward. We've got that break in on the Aussie yen. So we've managed to finally break down through that level. So any kind of pullbacks, be looking for short opportunities on this one. Obviously, this is massively extended to the downside. So there is an opportunity for a mean reversion trade. But as far as I'm concerned now, I think that's probably going to be counter trend. So we really wouldn't want to take that one. The New Zealand dollar CAD, that one I'm already in. I've got New Zealand dollar CAD that I'm in. Oh, I took an Aussie Swiss short yesterday, by the way. Here. Well, I didn't take it. The EA took it, basically. The EA took that one there. And got out of it straight away, same day. So it was a nice, easy, quick one hit trade. And I closed out some oil yesterday as well, which I think I posted in the Telegram group, didn't I? So that was that. Oh no, it was yesterday morning, so I covered that yesterday morning, didn't I? But yeah, New Zealand dollar CAD. This is my biggest issue at the moment, New Zealand dollar CAD. So I'm at 150 ADR short, which is quite nice actually, because it's support. So the EA is just trading it for me as normal. I'm waiting for this one to come down. So with New Zealand dollar CAD, we are now extended on the 4 hour again. But as you can see, we've been extended multiple times on this. We're in a squeeze on this one at the moment. So it has pulled back off of most of these, but the pullbacks have been so insignificant. We're going to get, if you look at it bigger, we're going to get some kind of pullback, which is going to be a correction on this one. Quite where we're going to pull back to. This is the obvious level for me, which is around about the 50, which would be, if we're going to continue, somewhere in the 24.72 zone. Worst case scenario, I think we'll pull back to the 24, which will kind of go as we start to pull back, sort of go like that. So putting back somewhere around the 23, which is going to be your shallow pullback. Just waiting for it. We haven't had, since this move started down here back in October, we haven't had a real correction of any kind. We've had an accumulation, a push, an accumulation, a push, accumulation, push, accumulation, push. It's going to correct at some point. It's just not happening at the moment. That CAD news yesterday, I was quite surprised. I was expecting strong CAD off the back of that, and we got completely weak CAD. Go figure. But anyway, so yeah, looking for pullback on that one. So there's a good ADR RSI extension to get into. It's extended on the hourly as well. Just broken out the highs on DAX. Going for a run to the highs this morning. The other extension we've got is the US dollar CAD. this one was a lovely ADR hit yesterday. I posted this in the Telegram group yesterday. Yeah, that one there. Just get rid of all that lot rubbish. Yeah, you can see it. That's good. Oh, that's handy. So that US dollar CAD, I posted this in the Telegram group saying this is coming down soon. So we were at 225 ADR. The percentage is obviously, as we know, 225 ADR. There is a 2% chance of extending above that level. And we basically got to 225 ADR and it just went and collapsed. So the trade yesterday on this one really, it was yesterday. It was the ADR extension and the RSI extension, the hourly extension as well we had yesterday. So the entry was up here on M5 yesterday. So if you didn't take it, you've kind of missed the initial entry. It was there. And obviously we had a lovely sell-off and it's just pushing down a little bit more so far this morning. But yeah, that's extended to the upside. I'm looking for longs, US dollar CAD. I've got the EA set up to take longs for me. It will take all RSI extensions to the downside for me automatically. It got me in. I got in here last week, didn't I? I thought that was extended. Can't remember. Anyway. But yeah, US dollar CAD. So it's extended to the upside. I'd be looking for longs on it though, rather than shorts. So that's extended to the wrong side. Pound New Zealand is the only other thing we've got at the moment, extended on the hourlies. So that's a really nice level here. Yeah, we've just taken out that liquidity at yesterday's low, just extended on the hourly. There was a nice entry on this one yesterday as well. So I can't bring myself to long pound at the moment, unfortunately. DAX looks like it's just liquidity run the highs. We're struggling. This is what I mean. We're struggling at the moment. Every time we get any kind of upward momentum, it seems to get battered down, but it can't get that Santa rally started. But equally, it can't break the lows either. Really struggling at the moment, the DAX. This is yesterday's chop. Oh my God. Where's 230? Yeah, see here, look at the data, look. You can see the data, you probably can't see it, but it's 207, 327, 727, 1127. This is a 5-minute chart. Should be closing at 25, 05, 45. Weird, just weird. I've never seen that before. But yeah, 230, the open was 1630. Where are we? There. Yeah, so we basically had a quick run up at the end and then chop. And then we had a load of chop in the middle. It's just a horrible choppy session yesterday. It was like you had an opportunity there, you had an opportunity there. If you didn't take those, and you had an opportunity there at the open. If you didn't take those, you were dead all day. It was just a nasty day yesterday. So hopefully today we'll get a trend day in. But we'll see. So yeah, Pound New Zealand is the only other thing extended on the hourly. I can't trade this thing. It's just a mess. I don't want to take longs on the pound because I'm bearish pound. So I don't really want to take this one. But just better get stopped out on that DAX. So stop loss is on a 30 pip. Is it a 30 pip trader? I can't remember now. I've changed the settings on this. I think it's 20 now. Oh, let's look at the EA. Morning. Yeah, 20. So I'm trading 20 now. Okay, stopped out on the long. So let's see if we get a short on. Yeah, so up to you if you want to take this. This doesn't look like a bad entry, assuming that we're going to stay in this range. But you got the low there, which is down at ADR today. This is holding very, very well, this level. We've just done a liquidity run down at this level. If you look at the last time we did something similar, we had a push back up to the highs, and the highs are, you know, it's absolutely textbook. Probably it's better to draw it on properly, but it's just an obvious, you know, and sometimes things are too obvious, but it is such an obvious range. You've got a good 230 pip move if the range is going to hold. So where we are right now, it's a tempting long, isn't it? So just trade it back up into this range. You're probably going to need to hold it for 3 to 5 days if you want to take it all the way up to the high of the range. I just gone short the DAX. But yeah, that's really all you can do with this one. So extended to the downside yesterday, had a profitable trade. The fact that we've actually taken that market reversal alert and put in a lower high and now put in a lower low, potentially this could be the start of movement down. But as I said, I'm looking for weakness to come creep in on the New Zealand dollar as well. So if that is going to happen, we may just stay in this range. But we'll see. But yeah, that's all you got extended on the RSIs at the moment. So there's nothing much else to look at there. I'm going to whiz through all the pairs quickly this morning. Just monitoring what the DAX is doing. Down at these lows. I think this is set. I can't remember what settings I've changed. We are adding to singles. Yeah. We're adding to singles at 10 pip intervals. So if we break these lows here, we'll add a second position. And look to get a runner to the downside. If we are breaking short today, obviously yesterday's low is 83 points away, which is getting on for half an ADR. So there's plenty of downside potential. We have also got a hang on. This is why I was thinking we might actually get this break this morning. We have also got this gap. But when you get a gap like this on the DAX and such a violent run away from the gap, these are the ones I think, you know, when you look back in history, these are the ones you find it doesn't get back to them, or it gets back to them in a kind of a week or two, not straight away, because the gap is caused by obviously massive shorting stocks overnight, and then everybody agreeing, yeah, we don't want to be long on those stocks and dumping their stock. So to get back up there is actually quite hard work. So another reason I'm sort of bearish this morning. Will ads need to be done manually, or is the EA will take the ad on candle close? So with the EA, again, I'm still in testing on this. This is live. This is live forward testing on the results I think are good, but this is wrong platform again. You can also test on once per tick. So I'm running once per bar, which means all the decisions the EA is making are done on candle close. You can make decisions on tick. So if we had 100 pip add in, for example, and it moved down to there and then pulled back, you'd have an ad like that. So I found candle close more beneficial for trailing stops. Yeah, so you see that my risk on this, right, was 368 pips, right? So as soon as we've taken the trade, yeah, I've reduced my risk down to 20 points, right? Because the trade is working. The trade is starting to work. Therefore, I'm reducing risk immediately. If you do that on tick, what will happen is as soon as it opens the trade, if the opening range is bigger than the trading stop you've got set, it will immediately move your stop down. So if you were to get in here and then have a bull candle that goes like that, so i.e. we have one of those, yeah, you get stopped out before the trade even gets a chance to start. And what in my back testing I found that using candle close is just more efficient for this. And this is the thing that's making the money, the trailing stop. Because don't forget, this is a breakout momentum strategy. So we're not looking, if it goes like this, I'm not interested, because it's highly likely it's going to get back up there. We're going to go range bound rotation. If it goes, it goes. And I want it all bang, bang, bang. And then it will have a little bit of maybe a pullback, and then start the next leg. Yeah, we're looking for a trend breakout. If that happens, the candles tend to close bearish the vast majority of the time. Therefore, when you close as a bearish candle, that's when you trail. You can have this wick all the way up there and then close bearish. That's when we're moving the stops. And that's when the EA is always taking the addition. So this has to close 100 points in profit for it to add a second position. And the second position stop will be up there, which means it takes a smaller position, less risk. It's adding on, but it's adding on at a smaller size. And then if this then does that and moves down, that stop will then get adjusted down to there as well. So it reduces your risk all the way. As the trade's working, it's constantly reducing your risk until it gets to a point of break even. And then you're either going to get the run or you're not. So you see this take another one in a second. As long as this closes in profit, which it looks like it will at the moment. We've got just over a minute left. I also, yesterday, just while I'm talking about the new EA, I came across an issue with, I did some live visual testing on my Forex funds and on my Robo Forex account, and obviously discovered a massive difference. So this is not going to place an ad now. If this candle closes like this, we're not going to add to the position because this is bullish. Yeah, hence why the ads are done on candle close, because this is now bullish. We're rejecting this low here. Liquidity sitting there. And there's limit orders triggering. So if the limit orders are going to suddenly overpower the sellers, we don't want to add. And that's the danger of adding on tick. Yeah, candle close is what shows you who's in control for the last 5 minutes. If the bulls are going to end up in control for the last 5 minutes, I don't want to have added a position because I'm immediately in drawdown on it. Yeah, so another problem discovered is obviously the difference between someone like Robo Forex, yeah, who does not show pre-market data. We only get an hour before the open of Frankfurt, and someone like my Forex funds, who gives all of this pre-market data. You get totally different results with the EA, obviously, because not all trades are closed end of day. If you've got something that's run with a big stop on it down here, it could get stopped out on my Forex funds, but on Robo Forex, it won't get stopped out because none of this data exists. So that's another thing that needs to be considered, because obviously your broker is going to make give you different results with the EA, which is quite normal with EAs, but because no broker's got the same data. But obviously there's a massive difference between a gapping broker and a broker that shows pre-market data. So I need to test all of that as well. Anywho, that's my problem. So it's just putting back up inside at the moment. So we're going to whiz through all the pairs this morning. Just want to see what's going on with gold. Yeah, we are sideways. So still waiting for that US dollar. I've got a feeling we're waiting for non-farm this week for any movement on the US dollar. I'm hoping it's going to start today, but I've got a feeling we might be waiting. So we've got a nice propulsion candle there, but that propulsion candle didn't manage to break the lows. So it's quite possible this is just going to get run through again, unfortunately, which would be a double loss today. Oh, we're watching something like it's like you're waiting to be shot. Just waiting to be stopped out. Yeah, so gold's not going anywhere, obviously based on US dollar movement. I'm just going to look at Bitcoin as well. Yeah, so Bitcoin's rallying. So Bitcoin is kind of a little bit of an indication as to what's happening with the indices as well at the moment. So we had a big bullish move off of Bitcoin, stopped out on that one. So no joy this morning on the DAX. So yeah, so yesterday we had an inside bar, which has broken to the upside. So this can kind of give you some clues as to what the indices are doing as well, because this is trading the same way as the indices now. Bitcoin, it's just being dragged along with the indices because it's there's nothing else driving it. So I'm keeping an eye on this on a daily basis just to sort of give some clues. When we get some bullish price action coming in here, we quite often get some bullish price action coming in across the indices as well, and vice versa. But I haven't worked out whether this is leading or following yet at the moment. But just interested to see whether or not we manage to get a big move. If we see a big move coming in Bitcoin and we don't see it on the indices, that might be an indication that we're going to get some decent movements coming on the indices. But there's nothing there this morning. Stopped out. Look at that. Slightly too tight. And this is the thing with this, with back testing, you've got to pick a setting to use in the EA, and there's no right or wrong. Come on, Excel. Morning. Thank you. So DAX data, that's the one that I'm running at the moment, which is 7% drawdown for the DAX. If I'd have taken the one that was 300 pips, we wouldn't have been stopped out on that this morning. That returned 88 grand. Where's the 100, 300? Down here somewhere. There. So that returns 73 grand. So there's a 10 grand difference with a 10-point trailer. So this is the problem with with this EA is, out of 8,000 runs, when you've got 7,900 of them being profitable, which do you pick? I wish I'd have picked 30 instead of 20, but I picked 20. If I'd have picked 30, this would be a profitable day. But then tomorrow, you might find that you were happy with that 20 pip trailer, because what happened was it went flying that way, and you actually go, oh, I made 10 points less profit. It just swings and roundabouts, isn't it? It's a problem with long-term backtesting results, is you don't know which one to pick. Anyway, so stopped out of both of those this morning. We'll see how we do this afternoon with the NAS and the Dow. So let's run through all the pairs. Aussie dollar. So Aussie's a little bit of a mystery at the moment. Not sure if I'm bullish or bearish on the Aussie at the minute. I'm confused, to be honest, about an awful lot of these instruments at the moment. When you're getting things like this happen, which should be negative, and you're not getting negative movement, you're getting things like this happen where there should be no impact and it goes absolutely crazy. It's very difficult to figure out a fundamental bias. And at the moment, we've got an awful lot of corrections going on, which means that the trend bias is also different. So Aussie dollar has had a couple of misses now. So we've missed inflation. We missed interest rates last quarter as well. So, from the Aussie's perspective, everything is a negative. Obviously, the Canadian dollar has been incredibly weak, and obviously we got that further weakness yesterday, which has driven it up another leg. That's where we were looking at going, wasn't it? Which we got a rejection of yesterday, but we're sort of pushing up and playing around that level again now. So we'll see if we get the rejection there. But this is a tricky one. I'm expecting the Canadian dollar to get dragged along with the US dollar strength, but we haven't had that either yet. So this is the week for news for the US dollar. So we've got loads and loads of important news coming out today. We've got loads of important news tomorrow. We've got loads of important news on Friday. So this week is a very key week for positive and negative news. And obviously then we're leading into the 14th is the next rate announcement, FOMC. and that is when they are going to change, obviously, the rates. We're forecasting a 0.75, which should be bullish. So it's difficult at the moment to understand why we're not getting that US dollar strength coming through. We're getting not too bad figures. We've got the Fed saying the right things, yet we're not seeing the strength. And the Canadian dollar does tend to get pulled along with it, and it isn't either. So oil prices are holding the CAD down as well. Obviously, bear that in mind. Until this starts to recover, that's going to hamper the Canadian dollar as well. So with the Aussie, you should be bearish. I'm feeling I need to be bearish on it. I took that Aussie Swiss short yesterday because I'm more bearish on that and more bullish on the Swiss. I've got the Aussie New Zealand long on, but that was a bounce before all of the bad news started to happen at once. So there's nothing I can do about that one. So I'm really neutral on this at the minute. But from a technical perspective, obviously you've got very key levels coming up at the moment, which have been respected many times in the past. So these are good support resistance levels we've got. We've got this level here as well, obviously. Yeah. So this zone, if you like, is a key area. We're extended as well on the 4 hour to the upside. We have had decent profit take moves, so I would expect them to continue, but I would expect a much bigger correction on this whole move. So it looks like a good area to start getting into short, with the anticipation of all of this negative news actually affecting the Aussie negatively, and the CAD being bolstered by oil, which is predicted to rise, and the US dollar, which is predicted to rise as well. So it all points towards, fundamentally, that sort of movement. Technically, we've got some really good levels for it to bounce at as well. So looks good. So yesterday, obviously, we just about extended on this one, and we were extended yesterday on it. So there was an entry yesterday, but that entry was off the back of an ADR hit as well. So reason for taking it could have been multiple, couldn't it? You were extended on the 15-minute, you're extended on the hourly, you're extended on the 4 hour, and you got an ADR of like 200%. So there's so many reasons to get in short on this thing yesterday. Ever such a slight rally off the back of negative news. This market at the minute is just chaotic, and it has been for months. It's just thrown everybody into confusion. We're not getting the movements that we expect, but where there is a move which is strong, there is always a profit take at some point. So regardless of how the banks are positioned, there will be corrections coming through at some point on them anyway. So just a waiting game. Aussie dollar Swiss still short based on Swiss franc strength. This thing's not going anywhere at the minute. We've had a weak Swiss franc. We've had a weak Aussie. Therefore, we've had a week against a week is a range. And that's exactly what we've still got. So I would be interested in shorts at the highs based on Swiss franc being stronger than the Aussie right now. There you go. Got bearish engulfing going in on the hourly. Take that back down to the range lows. Yeah, the same thing yesterday. Same thing on Friday last week. Same thing on the Friday before that. So, yeah, this isn't going anywhere at the moment, but I'm much more interested in shorting it than longing it. All yens, I'll run through all the yens again at the same time. I'm looking for yen strength now. Since the interventions have come in, we've got a little bit more hawkish talk coming out of Japan. It's not really confirmed yet, but we have had, obviously, on the Aussie, for example, that break, that big flush down, big yen strength coming through. We had another little yen push. It does seem like it wants to go now. So all of these yens, I'll be looking for short opportunities, which means waiting for pullbacks on the 4 hour or waiting for pullbacks on the hourly, and then taking some short positions. If they get there. If they don't get there, obviously, we could just go into a really strong, if this is going to be a strong trender, obviously, you're just going to use support resistance for continuation of market structure, aren't you? So you get market structure reversal. So drop down onto lower time frames and just look for those levels, which are, they're really obvious. Every low. You just pick every low. And then when you get there, take the reversal of that. Stop. You're going to use a stop and down. Oh, DAX, you are really annoying. So that's where I got stopped out. Literally there. And it's flushed. Never mind. CAD yen. So again, you know, that's if I'd use a 30-point trailer instead of a 20, still be in it, wouldn't I? Then again, if I'd have used a 40 or a 50 or a 60, I'd still be in it. But never mind. Right, so CAD yen as well, same thing. Be looking for yen strength. So pullbacks on the CAD. Again, the CAD's obviously massively weak at the moment. Swiss, same thing, looking for opportunities to get in short. So RSI extensions, 15-minute RSI extensions potentially. Again, got a nice propulsion gap there. So support broke, not very cleanly, but potentially good short opportunity there. If we come back up into this area, ADR, opportunity for short as well. Euro yen. Again, I want to short this, but this is what I mean about this euro. It's got a lot more strength than it did before. Oh my God, look at this DAX. It just wants to kill everybody today, doesn't it? Look. Can't make that new low. Can't get that low in. Got a minute odd left on this candle yet, but there's so much buying pressure this morning on all the indices. Look at the others. Look at the NASDAQ. Hope you're not trading the NASDAQ this morning. Look at that. Wicks, 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 wicks. Hideous. Anyway, that's why we don't trade US indices in the mornings. So yeah, so euro yen obviously is the one that is possibly a little bullish still, but I don't know. It's certainly holding up better than the rest. So we're just down rejecting these lows again. So don't forget, all of this stuff can go into range as well. It doesn't have to go in a direction. If you've got a strong currency, potentially against a strong currency, you get a range. Or weak against weak. Pound yen, sideways mess. Would definitely want to be shorting this if it gives us any opportunities. So any extensions to the upside on the hourly, I'd be interested in shorts. So if we get back up into this propulsion gap, we get any ADR hits to the upside, short opportunities. New Zealand dollar yen, same thing. At the moment, we're just going sideways. And US dollar yen, obviously, this is the kind of anomaly. So if we are going to get a strong US with a strong yen, we're likely to get some tight range-bound action, a little bit like that. So this could well not go anywhere. So this might go onto the do not trade list, really. There's a nice propulsion gap here if we do push up into there. But I'm anticipating US dollar strength. But with US dollar strength often comes yen strength. So you tend to get these two fighting each other. So tricky one to trade that one. But I don't think we're going to see 150 again. I'll be very surprised if we get anywhere near that again. That's where the intervention really kicked in, and they said nope, no more. So yeah, I think we're safe to say we should be looking more for shorts than longs on this, but probably not the best one to take. Right, so there's all your yens covered. CAD Swiss, again, oil holding CAD back, US holding CAD back, Swiss franc is strong. This is a tricky one. Again, I'd be more interested in shorts than longs on this one, but as you can see, it's when we get these pullbacks, they are very push pull, push pull, push pull. So they're the kind of instruments you can, if you're going to get in on the extensions on the hourly or the 4 hourly, it gives you good outs. And obviously then we get the strength of movement. So this is Swiss franc strength, US dollar weakness. So I'd anticipate, sorry, this is CAD in this case, but same thing. I'd anticipate a similar sort of thing, just kind of flag and drop. So again, on this one, any extensions to the upside would be good to take short. I'm not sure you're really going to get too many on it unless we get some really good strength coming off the CAD. And what happened yesterday off the back of that GDP figure is a real question mark. Why on earth we got so much weakness off the back of that? The market, well, I know why. The market had factored in growth and it didn't get it. I think the market was actually expecting a better result and they didn't get it. So obviously everybody that had been buying the CAD dumped it. So it could be weak going forward for the CAD, but again, we've got so many. CAD's a tricky one. You've got so many things that drive it. You've got its own economy. You've got the US dollar, and you've got oil. So there's so many things that can affect it up and down on a weekly basis. It's quite a tricky one, which is why you get a lot of movement on it. But for the moment, I think I'd be staying in line with current trend. Swiss franc, I don't see weakening moving forward. So yeah, continuation down. And obviously tomorrow we got the CPI figures for Swissy. So we're forecasting a drop. I suspect that's factored in. This is month on month, so it's more important figure. So I suspect if we get a 0 or we get a positive, obviously that's going to be bullish for the Swissy. So as expected should be bullish, positive should be bullish. So the only thing really that will affect is if they came out with a negative figure, which they have done for the last two. But we've still seen strength coming through on that because they are still saying they're going to increase their interest rates. But the Swiss only do their interest rates every 3 months, which is slightly different to a lot of the other countries, which is usually monthly or 6 to 8 weekly. So we have to wait a little bit longer, and the Swissies never tell us what's going on. Notoriously tight-lipped about monetary policy. So, this is why you get these massive movements off the Swiss franc. This was a prime example. What do you mean you're increasing your interest rates? You never told us that. We were factoring something completely different in. Bang. So, you get shocks on the Swissy, which is why I don't really trade US dollar Swiss much, because the same thing happens there. Look. You get these huge Swiss franc surprises. A lot of people don't trade the Swissy. One of my old mentors didn't trade the Swissy for most of the time I knew him. He started to trade it at the end, but he didn't trade it because it's too volatile, too erratic. But then again, a lot of people look at that in the same way as they do with gold. It's brilliant because if you get on the right side of it when it gets volatile and erratic, you can make a lot of money. Equally, you can hurt a lot. But if you're position trading, it's just a very tricky currency to handle, isn't it? So, where was I up to? Euro Swiss, I guess, wasn't I? Where was I? CAD Swiss, wasn't I? Yeah, sorry. So that I'll be looking for bear movement on that one. Euro odd. So all the euros at the moment we're in kind of a holding pattern. If you could only trade one pair, which would it be? I couldn't pick one. It doesn't work that way. Things change. Remind me I'm on the euro. And this is the reason strategies in EAs fail. Yeah, things change. Last year, if I could only trade one pair, it'd be the S&P 500. Because if I was the most stupid trader in the world, I couldn't fail to make money on it. This year, look at the volatility. Look at the direction. Aussie New Zealand, another prime example. Yeah, since December last year, a monkey could make money on that. Now, no. You can't trade one pair because the movement changes, the volatility changes as fundamentals change. If you're a country, Russia, prime example. Let's say I trade the US ruble, right? What am I going to do now? I haven't got a clue. Have not got a clue. The volatility's gone through the roof. The direction's changed. The liquidity's dropped. I'm out of a job. I've got to start again. It's taken me 14 years to get an expert in that thing. Now the thing's gone mental. What do? Start again. Can't do it. You've got to have multiple instruments. You can become a specialist in something, but even if you become a specialist in the DAX, for example, and you're intraday becoming a specialist in the DAX, this thing changes on a regular basis. Everything changes. If you're trading indices, you've got to become an expert in stocks. You've got to know when the earnings are coming out. You've got to know what's driving this. What are the main companies in it? The top company in it is S&P. If you don't know that, you shouldn't be trading it, because you need to know when the earnings are coming out on S&P, all that sort of stuff. So you can become a specialist in something. But again, the top 40 or 30 stocks, depending on which, it's always 40, but some people haven't changed their tickers. The top 40 stocks change. Yeah, the Dow, the stocks change every now and again. You've got different drivers, different sectors driving them. Yeah, Pound New Zealand used to have an ADR of 350 to 400, and it did for many, many years. Now it's 146. The volatility's dropped dramatically on this thing, and it goes sideways all the time. Never used to do that. Never used to do that. It does now. So you rather than becoming a specialist or picking one thing to trade, you need to pick multiple things to trade with multiple strategies. Because one strategy is not going to work all the time on one instrument or multiple instruments. So you need to have a variety, diversification. But I haven't got a favorite. I have a favorite. Aussie New Zealand was my favorite last year. It's not my favorite at all at the moment. I hate the thing to death because I'm stuck long on it. I loved it for the last 12 months. So that's my favorite, but it's not at the moment. You know, I don't think you can. People specialize, I think, in things like you know, some people specialize maybe in the pound yen, or they just trade euro US or something, and they learn how it works, and they get to know its intricacies. But everything changed in 2020. Everything's changed again now with the Russian situation. We go into a recession. Everything changes. A lot of stuff starts to go sideways. You then have to stop being a trend trader and become a mean reversion trader, which is why I like mean reversion, because it works a lot of the time. So yeah, I don't think you can. That's the honest truth. I can't trade one pair. The other thing you've got to think of as well is if you trade one pair. So if you have a setup, right, that is yesterday's high, for example. So if you only take trades at yesterday's high is your strategy. You had no trade there. You had one trade there. You had a trade there. You had a trade there. But let's say, for example, you're mean reversion trading. You had an entry there that worked. You had an entry there that failed. You had an entry there that worked. Today, you've got an entry there that may have failed, may be working. We don't quite know yet. But if you have a pair that goes into a trend, for example, and you're yesterday's high trader, no chance of trading, no chance of trading, no chance of trading, no chance of trading. What are you going to do? Sit there for 4 days and not pay your mortgage? Can't do that either. So you've got, you know, if you have a setup, you have to have multiple instruments to execute that setup on. Because, for example, I trade, as you know, 4-hour RSI extensions. Yeah. If I was only trading Aussie New Zealand on 4-hour RSI extensions, yeah, I had a period from November to February where I couldn't enter. Yeah. So if I just traded one instrument, I'm stuffed. I can't make any money. Yes, I could alter my strategy to become trend based instead of mean reversion based. But if I'm going to do that, I need to have identified that as changed. I probably won't know that until I get to maybe there or there, in which case then I'll be looking for the trend there. And that's when the mean reversion to the downside started, and it started coming back the other way. So my trend trades would have failed. Yeah, this is the thing. You've got to have more than one strategy. You know, ADR scalps. I take some ADR scalps. I take mean reversions on 4 hour. At the moment, I'm using the hourly for entries because the 4 hour I'm finding less opportunities. So I've adapted to the hourly time frame and I've started doing more scalping. Yeah, you've got to adapt. You can't just pick one strategy and one time frame and expect that to continuously work. It's not going to happen because the market's fluid. It changes on a regular basis. So I would always recommend you have a really good mean reversion strategy and a really good trend strategy. Because when one's working, the other one's failing. As long as they're both having a positive risk reward, or not so much risk reward, but a positive return on investment, you're going to be okay, aren't you? If this one loses $100 a day and this one makes $110 a day, you're a winner. If you only trade a trend strategy when something goes like that, you're stuffed. It's just loss after loss after loss after loss after loss. That's assuming you're using a stop loss, obviously, which is why I position trade, obviously, because it doesn't matter too much. You know, I'm a hybrid of a trend trader. I try to trade in the direction of the trend, but I'm trading a mean reversion. I'm trading those. Not at the moment, obviously, because I was in the wrong way in that one particularly. But yeah, does that make sense? I have tried to become a specialist, and I couldn't do it because the problem with most traders, me included, is itchy finger syndrome. Yeah, if you're not in the market, you want to get in, don't you? You sit there and you go, oh, that looks like a good setup. It's not quite as good as I thought, but it looks good, and you'll take the trade. And it goes wrong. If you've got 28 instruments to monitor, you're always going to have a trade that you're in. And it's probably going to be one of your best setups, right? So if you literally say, I'm going to do nothing but trade ADR reversals, you got nothing so far today. But something will come up. Something will hit ADR today. It's very rare we don't get an ADR hit. We do get days like that, but not often. Yeah. And if you're just trading, you know, ADRs and AWRs, you've got one this morning. You had 100 yesterday, and they pretty much all worked yesterday. Doesn't matter which of those ADRs you took yesterday; they all pretty much worked out. US dollar CAD, you know, they all mean reverted. It's just finding where they're going to go from, isn't it? But you know, and if you just trade hourly RSI extensions, you're going to get something come up every day. But if you're only monitoring one or two instruments and all the RSI alerts come up in here, you're not trading. You're going to get itchy trigger finger and you're going to go, oh, I'm going to take that anyway because it looks good. Or you're going to drop down to a different time frame and move away from your strategy, you know, because you just want to be in the market. The more instrument, and everything moves the same way, and that's the beauty of mean reversion. Is everything mean reverts because it has to. If it doesn't, people don't make money. The mean reversion is a profit take move off of a big sell or a big buy. Yeah, that's a profit take move. It always happens. Yeah, if you got in here for any reason as a short, yes, you sat through a hell of a squeeze, but did it pay off? Yeah. It took a hell of a long time for the profit take. Everybody that bought this has got to sell the thing to make money. And I say everybody, I'm talking institutions. Yeah, this is why these things sometimes take so long, because we're talking about monthly and quarterly targets that these guys are looking to enter and exit their positions over. Sometimes you just have to sit on those quarterly moves, as I know. I'm in this, but it will mean revert enough for me to get out. If it came up to, if I get another hit, I'm 175 average on this. I only need to pull back to the 24 and I'm done. And I'll say, thank you very much, I'm out. Yes, definitely so hard not to trade, big mental struggle. Yeah, I mean, it is for everybody. The best, and this is why everybody, I think, immediately goes M5. It's like, what type of trade do you want to be? I want to be a scalper. Why? Because I want to be in and out of the market fast. I want to get paid. I want that instant gratification. I want the money in my bank today. But you are literally trading algorithmic chop. There is nothing in this world that is going to affect that fundamentally. If there's a big bomb goes off in Australia, it's going to go like that. But over time, it'll go like that. When you jump up to the hourly, which is where the vast majority of people I know that make money on the hourly and the 4 hourly and the daily, consistent traders, they don't touch these timeframes from analysis, me included. I do scalp, but I scalp prop, and prop is a different game altogether. But this is where the money's made. An analysis on the hourly timeframes. You can enter on these timeframes, but get in on M5 with an H1 RSI extension on H1, drop down to M5, take your entry on M5, but then jump back up to H1 to manage the trade. Where are we going from here? But these are the timeframes that make you the money. This particularly, I've got so many EAs that are profitable on daily timeframes, but they do not work on anything intraday, because this is the one that the big boys use, and they are the ones that make these moves happen. If they want this thing to go long, they can easily go down for 2 or 3 days. They need to, because they've got to fund your liquidity to drive the market back up again. So when you're trading on these small timeframes, you're just becoming a number. And this is why the stop hunt exists, yeah? And this is why everybody goes short. They put their stops up there, the market comes up and grabs them. Everybody goes long. They put their stops down there, the market comes and grabs them. Everybody that went short there, the market comes up. I didn't quite get those ones. But that's what the market does, isn't it? But look at the higher time frames. Yeah. And the signals on the higher time frames, they don't grab liquidity anywhere near as much on a higher time frame. Look at that low there. Yeah. Didn't get grabbed. If you'd have taken a long anywhere down there on that reversal alert there, you didn't get stop hunted, because you're not trading all the chop, which is where they're gathering your orders. Their job is to hunt liquidity. Liquidity is stop orders and limit orders. So your analysis being done on these timeframes is so much safer. But itchy trigger finger means I'm going to get 1, 2, maybe 3, 4, 5 entries in a period of 3 or 4 months. I want 5 entries a day because I need to make money. That's what everybody's thinking, not realizing that all they're doing is putting orders in the market to get slaughtered by the banks. But anyway, we know that. Euro odd. So let's look at euro pairs. So the euros, I'm slightly bullish bias on now, I have to say. Lagarde is talking up well. Figures are coming out a little bit better. It seems to be, to me, that they're potentially going to become second strongest currency behind the US again. Whereas we obviously, as we know, they've been in big trouble. So I'm kind of long bias on euro. I'm still short bias against the US dollar and potentially short bias against the yen, but everything else I'd be kind of long against it at the moment. So at the minute, we haven't got any movement whatsoever. We've got no euro news coming out either. We've got Lagarde speaking again on Friday, but there's no real euro news coming up from a rate or anything else basis until the 15th of December. So we've got a good couple of weeks. Obviously, the rates are forecast to rise, so I would expect in the coming weeks for the market to be pricing in that rise. So everything euro over the next couple of weeks, I would kind of anticipate some kind of upward movement until December the 15th. we're not getting an awful lot at the moment on anything really with it. It has these little bits where it pushes, and this is obviously weak Canadian dollar. But it's all kind of sideways for the vast majority of the euro at the moment. So I've got this slightly bullish bias on it because I think we should be looking for them interest rate rises, inflation rises, everything sort of going up, driving the euro up. Economically, they seem to be pulling out quite well of COVID. So, but we don't seem to be seeing any evidence of it. So for the moment, I think I'm kind of wanting to find any extensions to the downside for longs on the euro, but I'm still not sold on it. And I think this is me psychologically because I've been shorting the euro for such a long time. I think it's psychologically, I'm finding it tough to hit the button long because I'm just so used to shorting the thing and making money out of it short. New Zealand dollar yen ADR. First ADR hit. New Zealand dollar strength by the looks of things. Oh, pound's pushing against the yen. Euro's pushing. This is yen weakness. So we've got a weak yen this morning. We've also looks like we've got a pretty strong New Zealand dollar as well, which is why this has hit. So we've got a strong New Zealand dollar and a weak yen. Combination of those two means obviously twice as much movement. So the euros, all of them, I think, especially for the next couple of weeks, we should see some bullish movement coming through. So yeah, we'll see what happens with those. But obviously with the US dollar, that one potentially could be the spanner in the works, obviously, because the US, we're expecting to, again, strengthen up. But the thing with this is obviously, say, if we are going to get that euro strength and that US dollar strength together, what are we going to see? A range. So it doesn't matter really whether you long it or short it. You're going to get an opportunity to get out because as one is pushing, the other one, as soon as that starts to push, will push back down again, and that's what a range is. So all of these I'd be long on apart from Euro US, which I've still got a short bias at the moment. But again, this could all change in the next couple of weeks. At the moment, you've just got to be so flexible with directional bias because it's all down to interest rates. Ladder, yen weakness is bad for your euro yen short. Yeah. Only temporary. US dollar yen's not. Everything else. So we've got a strong US. A weak US, which is obviously meaning that the US dollar yen's not going anywhere. Again, it's just weak against weak equals sideways. Yeah, very weak US at the moment. Indices attesting to that. Look at that. So these are the days when this new EA, the opening range breakout that I'm developing is not going to work because it's a momentum breakout strategy. You have no momentum. Strategy doesn't work. A mean reversion strategy will work, which is why you need two strategies. One's going to work well in one situation, the other's not going to work. The other one's going to work well in the other situation. So trend trading doesn't work in mean reversion and rotation. So that's all the euros. So with all the euros, I'll be looking for potentially RSI extensions to the downside. So there's an hourly there on Euro New Zealand, which is retesting at the moment. We've got divergence there on the RSI, double bottom, upward RSI momentum. So we are looking like we've got a bullish move starting. Euro yen, obviously, any extensions to the downside, but this one again is a little bit. I'm still not 100% on this yen. I'm getting more and more bullish. It's interesting because I've been 100% bearish on the yen. Again, for the last year or so, I've been 100% bearish on the euro for 2 to 3 years. It all seems to be flipping now. And it's interesting, isn't it? All the currencies that have been really, really weak through COVID and have struggled, those are the ones that are likely to bounce back the fastest and the hardest, because they've been in the doldrums for such a long time. Their economies have adjusted, so they're going to pull out of this recession faster than everybody else, I think. But we need the interest rates and the inflation figures to confirm all of this, which is why it's important to keep an eye on these monthlies, which is again why I don't think we get a massive impact off that yearly this morning. But we'll see. Market doesn't have to react immediately when news comes out, don't forget. Pounds weak, all pounds negative. I don't foresee anything positive from the pound. Seymour, did I cover oil? I don't think I did. I skipped over oil, didn't I? Yeah, I did. I looked at it. Yeah, I mean, if you go back and watch yesterday's video, what we got today is exactly what I was hoping for yesterday, which is the 3-bar reversal. So I'll cover oil now before we do the pounds. So the 3-bar reversal pattern is obviously a down, a pause, and a push. So a push, a pause, and a down. That's not really one. It's a 4-bar reversal, but it's the same thing. Downward movement, pause, push. Yeah. So obviously the 3-bar reversal, when you're in a downtrend, obviously you want to see bearish 3-bar reversals, and in a bull trend you want to see bullish 3-bar reversals. But they either work or they don't. When they are a typical reversal pattern, but they also obviously fail like everything else. But on the daily chart, we've got exactly that. And the ones that happen at support resistance are usually the ones which are the most effective. But, you know, like any pattern, it can fail. But we've got this. It's like if you think of a car screeching to a halt, doing a U-turn. Yeah, going back in the other direction. So massive selling pressure. All of a sudden, the buyers step in and go, we've had enough of this. And then they go, we are confirming we've definitely had enough of this. And then we get that movement back to the upside. Obviously, in a downtrend, they've now got to get through all of this accumulation before they can make a new high, which is where we got stuck previously. So it looks good, I think, from where we are at the moment. I'm long on oil at the moment still. I think I'm pretty close to break even on that. Yeah, I'm not. I'm just 8 pips or so away. So yeah, I like the oil long at the moment, especially as we've had confirmation from Goldman Sachs. Not that I particularly pay any attention to Goldman Sachs, but when the large institutions are confirming the $100 a barrel they were after for Christmas, they've come out now and said, actually, yeah, we're going to miss for Christmas, but we're still wanting it for first quarter. It just confirms there's, you know, there is speculation out there that we are going to be increasing oil prices. OPEC coming out yesterday saying that they're looking at the cap as well. So again, that's all bullish for oil. Somewhere 7 o'clock last night, was it 6:45? Yeah. So cut oil output by 2 million barrels per day this month. Less oil output equals less stock. Less stock equals higher prices, because demand doesn't change just because the stock goes down. Therefore, we tend to see higher prices. So we got the buying into that yesterday, into that news. So yeah, I think we've got a good chance of a continuation long today. If we can get last week's high broken, which is what I was looking for yesterday, and we failed. We failed to even break the Asian range yesterday, but if we can get that high broken and we can hold above that high today, that should give speculators a good reason to start thinking a lot longer on it, which is basically the reversal of that. Yeah. So once we get that, could well get a retest, but we could just go. But, you know, it's not over yet. We've still got all this to get through. This is the initial break of structure, the pullback. We were looking for the next leg. We failed. We pulled straight back and taken all that out. Again, look at this from a longer term perspective, yeah, it's a double bottom bounce. We've rejected it once, we've rejected it twice. The market is not happy to go below 76 a barrel. 75, 76 a barrel is just not interested at all. So I think we've got a very, very good chance of a bounce from here, from what we're doing now. But, you know, at the minute, it's all down to fundamentals. So anything can happen. Pound. So yeah, bearish pound at the moment, looking for extensions to the upside on the pound. Again, it's another one of those we Liz Truss, Bank of England, no fiscal policy. Fiscal policy announced, still haven't got a clue, not going anywhere. So we're completely sideways on the pound at the moment with a bearish stance moving forward. So inflation figures going up, interest rates confirmed. We've got Bailey's speech yesterday. If we look back, I can't go back. I can't go back any further than that. There we go. So basically what he said, that's Bank of England's pill, and that's this morning. I would imagine he's just confirming what Bailey said yesterday, if I can't get back to Bailey. And let me go back that far. Yeah. So we were the first ones to come out and say that there was a recession. We know that. Significant upside risk to the inflation outlook. So basically just reconfirming that inflation is going to be going up. Rates are going to be going up. 6.5% is well above normal pay. So we're talking about the inflation figures. We've got a load of people going on strike. Everything's going on strike in the UK at the moment. Nurses, everything basically, because they're not getting pay rises in line with inflation, because inflation has gone so far through the roof. We've got signals that everything is going to be continuing to go the way it is at the moment, which is bullish. So we should be looking bullish for the pound. The problem is everything else is slightly more bullish from a that sort of sense than the pound is, and economically we're not coming out of it as well as other countries. So there's so many factors that go into fundamentals that drive the FX markets. But the general rule of thumb is inflation goes up, interest rates go up, currencies go up, because inflation and interest rates drive the value of a currency higher. They drive economic down, they drive poverty up. Obviously everybody gets poorer. And they drive the labour market down. People start losing jobs as companies start to cut because they need to reduce everything. So that's normally the way it works with the pound. But when you've got an economic situation which is retracting so quickly, even the inflation and the interest rates don't necessarily always have a positive impact. And we saw that again, didn't we, this morning with the Aussie? We didn't get that move on the Aussie dollar that you would typically expect to see. So I think long-term outlook on it is negative, but we may have some positive movement into the next rates, but I don't think when those figures come out, they will hold and will drop. So I kind of want to be bearish on everything pound-wise. We've got other things that are probably going to drive faster than the pound. So the pound for me at the moment has replaced the euro as the whipping boy of the market. And whatever happens with the other currencies is going to impact the pound. So if we have a big strong push on the CAD, pound CAD's coming down regardless of how strong the pound is. May or may not be the case, but fundamentally we are in so much debt. We can't borrow. The problem we've got is we can't borrow any more money. So it's all about cuts. Cuts hurt. So it's about rising taxes and cuts and everything to get on top of this, rather than using inflation and interest rates. Don't forget, there's the banks and central governments have got more than one tool in their toolkit. They don't have to use interest rates. They can use other things as well. So I think that's just lots more affecting the pound than there is with some of the other currencies out there. So personally, I think shorts on everything pound. But at the moment, we're not going anywhere, are we? So I'm not seeing any indication of directional bias whatsoever on anything pound. Pound US dollar at the moment, this is off the back of the weak US dollar. This is what I mean. When that US dollar powers up, the pound's just going to come down. So I'm just short bias on it at the minute. I can't find anything to get into though, because it's all an absolute sideways mess at the moment, isn't it? So hard to trade. But any extensions to the upside on the hourly would be good for short opportunities. But again, like with everything, just get in and out quick, like I did with the Aussie Swiss yesterday. In, out, done. If it works out straight away, fantastic. Because just don't want to leave the risk on the table too long at the minute, because things are changing too fast. So pounds, I'll be looking for shorts and everything. So looking at hourly RSI extensions to the upside, 4 hours if you can get them, which we have got at the moment on pound Swiss. Had the reversal alert, which is retested. The trade's already done on that one, but that entry was on the 25th. So there was your entry there, short. But yeah, pounds all short. New Zealand dollar, as I say, I think this is coming to an end. It's got to come to an end soon. Well, it hasn't got to do anything. The market does what the hell it likes, but you would expect a correction on this. This is a long one without a correction. Look at when you get these real squeezes, how long a real squeeze tends to last. Yeah, this is the biggest yet, the biggest for a long time. We're going back here to November last year. This is 12 months. So this is the biggest, strongest push we've had from the New Zealand dollar. Happens to coincide with some really weak moves on the Canadian dollar. Morning, Neo. You're very late again. You have to watch a replay. So yeah, I'm just waiting for the correction. Basically, your correction could easily be a nice big one. It could be a little small one like this. So I'm not anticipating a massive correction. I think if we're going to, but again, my bias is really, I think we should be seeing much more CAD strength. So I can easily see this pulling back 50% on this move, which is why I've got the fib on there. So this level here is around about the 23. Yeah, so that would be a shallow pullback. You got a level in here. That's not really a good level, is it? Yeah, there's no other real strong support and resistance. I'd say that is probably the best level there, really. So that's roughly your 38 to 50 retracement, which will be, by the time we get there, that 72.24 bounce. So that's kind of all I see, worst case scenario initially, New Zealand dollar CAD doing. So where it is now, I'm already in it. But if you're not in it, I think there's a good spot to start selling it, waiting for that mean reversion to come in, or wait until we get down there and then take it long again. But the problem is, at the moment, by the time these moves have happened, something fundamental has shifted on one of those currencies, and that's the difficulty at the moment. We're used to having nice big strong trends. One currency gets really strong and you start trading it and it keeps on going. At the moment, fundamentals are shifting on a monthly and 6 weekly basis with interest rates and inflation figures and all the other figures. So it really can flip like a coin at the moment. And the squeezes are happening a lot more frequently because we are getting one strengthening for a period of a few weeks when the other one weakens for the period of a few weeks, which means you get double the movement. That's the issue at the minute, with everything sort of flipping around. So, but New Zealand's had a very, very good run. It's definitely due a sell cycle to start, if not a pullback if we're going to stay with a buying momentum on it. Swiss franc, obviously, stronger than New Zealand, should continue to be so. We've had a little bit of a weak Swissy and a very strong, obviously, New Zealand, as you can see. So, but I'll be looking for short opportunities on this one. We had an extension just about last week and one the previous week. Both played out, but they were only just extended, not enough for me. I want to see it a little bit more extended than that. In fact, it hasn't got up to 75 all the way through that at all. That's why I haven't been trading it. But yeah, still like it for shorts. Hourly RSI extensions, you've had a few opportunities to get in with some hourlies as well, all worked out. But I think next leg down potentially could start on this one when we get that New Zealand dollar starting to weaken, profit-taking moves starting to happen on the New Zealand long term, or we get some kind of fundamental shift where inflation starts to drop and they decide not to increase interest rates. Obviously, that's going to bring that down as well. No such thing, I don't think, happening for Swiss. New Zealand yen, shorts, obviously, and short against the US. And again, we're just waiting for US dollar strength. Again, decent pullback at the moment, looking for next leg. There's no reason at the moment, I keep saying this at the moment, why we shouldn't see some strength coming out of the Fed. But we need some positive figures, you know, and this is the thing. Everybody's expecting the same thing, but if you suddenly get negative, well, we wouldn't get negative Powell, but negative GDP, employment comes out as negative. If you get a lot of this in the row, people will start thinking, right, okay, we may not be seeing the strength, and you know the squeeze continues. So we're reliant on data coming out decent. But from a technical perspective, obviously, we had the reversal alert there off of that RSI extension, which started to work out nicely. But again, we are just sideways at the moment. Indices pushing again. So we're back out the highs. So couldn't make those lows, unfortunately. And this is the annoying thing. If that hadn't have pushed up and triggered that long entry there, we'd have taken that breakout this morning. But we got into it too early and had a nasty whipsaw rotation morning. US dollar CAD rolling over. So starting to come down on US dollar CAD. Be looking for long opportunities on that one. Just basically because US dollar, you know, these guys are very, very close trade partners. What affects one tends to affect the other. Bigger economy tends to win out. Unless oil goes absolutely mental, in which case you might find the Canadian dollar starts to take control. But looking for longs on that one, nothing at the moment. Looking for RSI extensions to the downside. Struggling to get entries on this. I could have sworn I got into a US dollar CAD last week. Maybe I didn't. Can't remember. US dollar Swiss. Really not trading this thing at the minute. It's far too volatile for me. And at the moment, I just don't know which way this is going to go. You got a real strong push and pull. If you're the wrong side of it, obviously, it's going to hurt. So for position trading, not really that interested in it. From a bias perspective, it's very difficult to trade. So, you know, this is real price action on this US dollar Swiss. And then you get the odd news event. And then we go back into the price action again. So it's range bound until the next news comes out. It's just if you take a short on an RSI extension at resistance and the next news comes out, you could be stuck in this for a long time and stuck very, very fast. You know, the swings are violent and very, very strong when they happen. So at the moment, want to be bullish on it, but yeah, not for me at the moment. US dollar yen, again, push and pull, hard, tricky at the minute, very tricky. lots of squeezes and lots of sideways. And it's very difficult when you're getting this sort of price action off of the back of news events to get into positions, and then we are just getting these horrible sideways movements. So waiting. There's a nice reversal just starting on the DAX. There is actually a doji there. There we go. There'll be a doji. So potential 3-bar reversal there. Again. So there's your opening range high 2. We spoke about this briefly yesterday. So this is 1.5 hours in. In a rotation day, if we're going to get a rotation day, typically that is your high and your low in for the day. And then we just muck about for the rest of the day, chopping people to death before we start the next move. But we'll see. Obviously, if it's a trend day, then it will just pull back and go. But yeah, tricky to trade this morning. Very tricky. Right, that's all I've got for you today. Obviously, there's a lot of news coming out today. So we've got the 10 o'clock, half an hour. We've got the Euro estimates for CPI. Might get a bit of movement off those. Obviously, with the indices, those will be affected as well. So, well, specifically the DAX. So, if you're trading the DAX, be aware of that at 10 o'clock. Non-farm 115, got GDP at 130, jobs at 3, and then we've got Powell speaking later. So it's very US heavy today, all afternoon. So volatile afternoon ahead, I would suspect, with the indices, which could be extremely good for us. So let's see. Thank you, Lou, as always. Wonderfully articulated, which is why you're here. Articulated. I'm a good articulator. Never thought I'd be called a good articulator. A German coming out this morning, didn't we? I just want to see what Pill's been saying this morning. Inflation is expected to fall rapidly in the second half of 2023. Yeah, so this is what I mean. When you see this, inflation and interest rates are a key driver for higher prices. But what tends to happen is the market will drive a currency higher on the expectation of what they say happening. When you get those figures come out, if those figures are a miss, that's why we get those massive drops, because it's the market going, the market wants to do one of two things: be right and continue to be right, like that, yeah, on a trend. So they buy into the inflation or interest rate figures, they come out as expected, and the market goes, thank you very much, we were right. We will buy into the next one because you said it's going up, we were right. We'll buy into the next one because you said it was going up, you were right. It's when it's wrong, like we saw with the Australian dollar, that's when the market goes, hang on a minute, you told us it was going up. And that's when everybody sells off. And then you see these collapses, which is what we've had in the Australian dollar against the New Zealand dollar. So all of this is hawkish, which is bullish, which is saying we're not expecting inflation to come down for over 6 months, which means we should expect inflation to go up for the next 6 months, which is positive for the pound. So if you were just trading off of interest rates and inflation, you would be buying the pound. But there's so much that goes into the melting pot. And this is why I say about these scorecarding systems that the institutions use. Inflation and interest rates are just part of that scorecarding. If everything else, sovereign debt, printed money supply, housing starts, unemployment, if all of those figures outweigh inflation and interest rate rises, that currency will come down. At the moment in the UK, we've got that imbalance of, yeah, we know everything's going up with inflation and interest rates, but everything else is way worse. Hence, we're not going to be trading as well because our economy is not producing as much money. Therefore, the currency starts to come down. So there's so many different things that go into the equation. which is why I'm kind of I'm building a spreadsheet at the moment, a fundamental analysis spreadsheet, to kind of document all of the important things and try and just sort of do my own like little scorecarding, if you like. But that's one of those things from a fundamental perspective that kind of flies against the way the currency should be going. We have more to do with rates in the coming meetings. We are going to be putting them up. That is what you need to read into that. More to do. After saying inflation's going up, the only more to do you can have is interest rate rises. If you don't increase interest rates, inflation's going to get even higher and even worse. So that means that we are definitely getting more rate rises. Base rate does not involve rates reaching base case does not involve us getting to 5.25. So you then have to look at where we are at the moment with the Bank of England rates. And they're saying we're not going to get to more than 5.25. So that 5.25, we would expect them to get there in 6 months. At the moment, we are sitting at 3. So we've got 2.25% in increases over a period of 6 months potentially ahead of us. Yeah. So if you're going up at 0.75 every meeting, that's probably about right, isn't it? So we should expect a 0.75 to a 0.5 increase every time they increase their interest rates. Again, bullish currency. Unemployment change. Oh, that's Germany. I thought he said something about unemployment, didn't he? No. Oh yeah, make it remain very tight. So again, this is we foresee problems happening with our labour market. Unemployment rising. Unemployment rising means people put more emphasis on the debt that we have. So we have to pay these people who are unemployed out of the government. The government is in massive debt at the moment. It hasn't got any money. How do you pay these people? So all these other factors are causing the pound to not have the strength that we're seeing off of other currencies when they see their interest rate and their inflation going up, because they're a little bit better off than us. Because our interest rates, our inflation just went through the roof, far too high. Hence us coming out first of all and saying we're in a recession. So there's so much that goes on under the hood. Very difficult to unpick, which is why I've got a guy that puts together a scorecarding of his own, which I'm going to start probably using and following, just so that I don't have to do a lot of the legwork. To be honest, I'm lazy. But yeah, so I'm gonna start using that a little bit more. I think Russian and Chinese planes conducted a joint patrol. Oh, that's not good. There you go. So there's that 1.5 hour high. What a mess today. Look at this. What an absolute mess. This is the problem with trying to trade high volatility. By the time you see the move's half over. And if you don't capture that little bit, you're stuffed. Not a good day. We want a trend. We want a nice trend day. Let's have a nice trend day. Hopefully this afternoon with the US indices, we'll get a nice trend start. Right, I'm going to leave it there, guys. I'll be back tomorrow, same time, 7:50. A little bit late on Thursdays usually because I have a class that doesn't finish until later. So sometime between 7:50 and 8. I'm not here at 7:50 on the dot. That's why. Yeah, good luck with everything today with all of these. I'm just going to be managing my current positions at the moment. That's short. Aussie New Zealand long, New Zealand CAD short, and oil long. So just going to be managing those really and trying to get out of some of those positions. The EA is still set up and running to take trades for me. Just hasn't had any opportunities. Aussie Swiss it took yesterday because it was a setup. Haven't had any others. So I haven't got into anything new. But yeah, watching these figures this afternoon, hoping we can get some really good. I'd love to see this all be green. If it was green across the board, it'd be absolutely fantastic because the indices will really come down. We'll get that really good, strong movement on the US. And if Powell comes out all hawkish later on, we could have a big day on our hands today for the US, confirming some of this moves. And then we can trade all of these long tomorrow, which would be lovely. But we'll see. All right, so have a good one. Anything you need, I'll be in the Telegram group as usual. And back tomorrow morning, 7:50. So I will see you then. Have a good day.